The most underpriced options I've seen in years in relation to one of the biggest catalysts that can take this market promptly. 10 a.m. tomorrow, September 9th, 2025. The crash can begin and it may not stop for days. We're talking about catalyst after catalyst after catalyst producing a sequence of bearish moves, and it could begin as early as tonight. I'm recording this on September 8th, guys. And we had something happen on Friday when the job number was reported. And, most of the people were focused, there were just so few jobs reported, which was 22,000. But if you paid attention closely to what we have been trying to inform you here at 13 Market Moves for the past 2 years, we basically said that every job report has been inflated by a significant number. And for the very first time, this past Friday, they actually acknowledged it in a big way. So basically, most of the people focused on a 22,000 job creation instead of the normal 170 BS number. But what really transpired is the revisions for the month of June. The revisions actually produced what? What have we been saying for the last 2 years? The job numbers have been fucking negative. So for the first time, September 5th job report revision produced an actual negative number for the month of June. Basically, what I'm saying is they've been lying to you for the last fucking 2 years. They're lying to you now. The job number that was announced on Friday of 22,000 was probably minus 200,000 jobs, but that is going to be revealed tomorrow. And even if it's just revealed to a slightest extent to what I'm actually voicing here, then the repercussions for the market could be enormous. Now, we could also get a double-sided reaction where something can pump, dump, or something can dump and pump. But the point is, there was a moment of recognition in the market of September 5th for the very first time after multiple fake reports. And I call them fake because that's exactly what they fucking are, okay? Them government reports, the number is always fluff. The number is never real. They've stopped, calculating the job reports the way they used to do it in the 60s, 70s. I mean, there's like the actual unemployment rate is way the fuck higher than what's being reported. It ain't no fucking 4.3%. It's above 10%. But let me just tell you what is the biggest catalyst. The biggest catalyst is the annual revision number at 10 a.m. That is shockingly, nobody's talking about it. General media is not covering. Financial news is not covering. The one number that can swing the market from stupid, ridiculous bull in the middle of a fucking recession to a total realization that we're in the middle of a recession and the biggest bear market could begin that you haven't seen since 2007, 2008. Okay, that number is tomorrow at 10 a.m. Now, most of the analysts in Wall Street bullshit is focusing on Wednesday, Thursday inflation number. And you looking at the price action today of S&P 500, the last thing is on your mind is, oh my God, something's going to crash tomorrow. Because the market got you by the balls. The market's got you so convinced right now that the probability of the crash is zero. Okay, so the market's got you actually convinced that the probability of a fucking market crash is negative. While the reality is the opposite is true. It's the job reports that are fucking negative for the last 2 years. And we're about to find out about it tomorrow, 10 a.m. If remotely they just report just a fraction of reality. Now, the job revisions that I'm referring to are done once a year on annual basis. It is not any specific date. Last year, we had a job revision in August. Now, the market circumstances and context and charts were quite a bit different. We didn't have market rallying 30+%. Some stocks like CRGO rallying 500+% within a matter of 150 trading sessions, or not sessions, days. So the number of trade sessions probably under 140. Guys, we're talking about a setup. The craziest fucking setup of going high on the lowest volume on record. Okay, about to meet the catalyst that is unmatched to anything before. Unprecedented. So just is a reminder, last August, the jobs were revised and the reaction of the market was slightly negative. Now, what they reported last year under the Biden administration, they were off by 920,000 jobs. So if you take it, those numbers were reported in August. If you take it and divide it by 8 months, that's over 100,000 jobs that were misstated, that just blatantly lied to the market, on which Wall Street managed to still move higher. Okay, my argument is simple. The very thing that caused the reaction to the downside, by the way, guys, they're fucking beautiful trades on Friday morning when the market was pumping to 65.40 on ES futures, when the markets were pumping on RTY futures, when the market were pumping on NASDAQ futures. We shorted them all. And, depending on where exactly you shorted, within a few points off the top, you got to name those puts win instantly 10, 15, 20x. So congrats. Now, also, as soon as we touched the level of 64.52, the shit began reversing, which we were going for a perfect move expansion day that just got paused on Friday. And today we got more of a pause. So sometimes what this means, what this really translates, is something that I call a market delay effect. So tomorrow, this delay that is taking place between what transpired Friday into today's trading session on Monday, September 8th, it could all resolve into a grand move expansion to the downside tomorrow. And it could continue based on the inflation data catalyst on Wednesday, another inflation report Thursday, okay, and complete capitulation by Friday. So just exactly when none of the market participants are no longer expecting, okay, something to move in a big way to the downside, that's exactly the moment where it could happen. Now, it could begin happening tonight because I'm not sure why nobody's covering this incredibly important report that comes out at 10 a.m. tomorrow. But I'm telling you, it's absolutely going to produce, at least initially, a negative reaction. And whether it's going to continue for another few days, as wild as the market is, we're going to find out. But based off the sequence of 13 market moves, okay, we're looking at a highly bearish sequence here, guys. We had two. We had almost a combination of 11.6 today that ended up popping it, slightly after hours. But guys, that's we're still running close to like 211, and tomorrow possibly 333. We're very close. We are. And the fact that options are so mispriced heading into 3 back-to-back catalysts that can produce oversized moves for the market. I'm not sure what the fuck Wall Street is looking at, but I think the situation is totally mispriced. So, based off options pricing, I'm not sure what the fuck Wall Street is thinking, but I'm telling you what they're thinking is this job data is going to be beneficial for the rate cut. And the rate cut is already fucking priced in. And now they're beginning to price the half a point cut. And I'm telling you here, if a half a point cut is going to happen, the market will absolutely fall the fuck out. Okay, there's no ifs or buts about it. So you don't just, as a Federal Reserve, you don't go no cuts, no cuts, no cuts. Oh, fuck, half a point cut. It's just, It'll be the same as Federal Reserve acknowledging their mistake. And last year, the market ignored it when it caught half a point. But I think this time, it's not going to be ignored. So we're in a situation where, I mean, the markets are very fragile. But yet, when you look at the price section, you're convinced otherwise. Well, we're going higher again. We're going high. I mean, I don't know many bulls that fucking bought the market at 65.40 level when it was pumping on Friday that still have anything left in their trading account, because that shit was brutal. I mean, within moments, we're reversed from 65.40 all the way down to 64.50. I mean, that's a 90-point move in less than 60 minutes. I mean, those are the kind of, when the number of points exceeds the number of minutes within a certain time frame in a trading session, you know, okay, you're looking at a classic move expansion, and it tells you the direction of the move. So normally within the next few trading sessions, you would see a follow through. We could have gotten a major follow through today. It didn't happen. The market paused, but that's how the market's been. But my argument is this market is about to transition from what has been into what's coming, and it can happen as early as 10 a.m. tomorrow. So with all this information, guys, there's multiple ways to trade this move on S&P futures, on NASDAQ, on Russell, on oil, on gold. But there's one sure way that you can make 30x tomorrow if this move expansion comes through. And get in touch with the 30 Market Moves coach as early as tonight, because you may want to be put in this position on as early as tonight, September 8th, ahead of what's coming that nobody's looking at, nobody's talking about it, nobody's pricing it in, okay? But yet, it is so real and apparent to us here at 30 Market Moves. I absolutely had to record this message to make sure that you guys are taking advantage of it. Anyways, huge bearish sequence could be unraveling right in front of your eyes here, and I don't want you to miss it. If you don't know anything about sequences, okay, make sure you take the 30 Market Moves course and get familiarized with those. But honestly, guys, you need to take action now, because when things are mispriced in relation to the size of the move, that's when you want to be in the market, and you want to be in the market in a big fucking way. Let's go.